Imagine a world where you didn't have to wake up early every day, or drive to work, or make somebody else wealthy. What if you could have the financial freedom of time? Maybe not tomorrow, but soon. Sounds amazing, right? Well, it's possible. Anybody can do it. All it takes is a little bit of time and effort. My name is Michael Glunk, and financial freedom doesn't just happen magically on its own. You have to make some shifts in your life to actually achieve it. And I personally believe that one of the ways, in fact, the best way to achieve this shift is through the power of investing in real estate. Now, in this video, I'm going to share with you a step-by-step process to help you purchase your first investment property. But before I get into that, I want to first cover off on 4 key reasons why it's a smart financial decision to invest in real estate. All right, so reason number 1 is cash flow. Because if you buy the right property, it's like buying a little oil well that's constantly pumping money for you. And if you purchase enough of these little oil wells over time, it can become pretty lucrative. Reason number 2 is loan paydown. You can leverage somebody else's money via loan, typically a bank. Over time, that money gets paid down by your guests and or your tenants. So what might start off as a few $100,000 will get paid down over time and eventually dwindle down to nothing. All right, reason number 3 is appreciation. Now, we just spoke about how over time you're paying down your mortgage. Also, over time, your home's value is changing. It's changing based on the market. And a natural market cycle will have its own peaks and valleys. But in the long run, generally speaking, your home's value and trajectory is going up over time. All right, reason number 4 is depreciation or tax benefits. Now, I am not a CPA. This is not tax advice. Please connect with your CPA. But oftentimes you can pay little to no taxes on the income from your rental properties. What that means is, let's take a hypothetical $25,000. That $25,000 earned from rental revenue is treated differently than $25,000 earned from a W-2 job. More often than not, you get to keep more of that money. Okay, so how do you actually acquire a property? Well, the first step is to determine your market. I found it best for an individual to invest either in the current market that they live in or a market that's close to where they live. Now, I know some of you are saying, well, the market that I live in is kind of expensive, and don't let that be a hindrance. Because the reality is typically within a close proximity, let's call it an hour and a half drive, you can get to a market that's more affordable. That's not to say that you couldn't invest at a distance. For example, I live in Colorado and I invest in Colorado, but I also invest in other states like Montana, like Michigan. But what I find is that most people prefer to be close to their property. They like the idea of being able to drive by it. And especially if it's their first purchase, it's nice to have that comfort of having that close proximity to the property. So once you've determined your market, start to dig into that marketplace. Understand what are some of the economic factors driving jobs there. Dig into websites like Zillow, like Realtor, and start to peruse the available housing inventory. Condos, townhouses, single families, etc. Start to understand what product is available for what price point. So you can really start to get a feel for what's happening in the marketplace and what opportunities exist. All right, so step number 2 is to get pre-approved. So once you know the location, you need to get pre-approved for a loan. This typically happens through a big national bank or a local bank / lender. I personally prefer the local route because I feel like local banks and lenders tend to be a little bit more flexible for real estate investors. Step number 3 is learn how to analyze a property. This is probably the most crucial step, and there are a lot of tools out there to help you understand how to analyze a property. In fact, if you want a copy of the spreadsheet that I use, you can find a link to it in the description below. So in order to analyze a property, you're going to need to understand both the income and the expenses for a property. So where do you start? From an income perspective, what you want to do is jump on some websites like Craigslist, Zillow Rentals, Rentometer, or reach out to a property manager in the area to understand what certain size properties are going for. From a short-term perspective, you can also reach out to short-term property managers, and or you can also jump on sites like Airbnb or Vrbo and do your own analysis, or sites like AirDNA to get rental numbers for a particular area. When it comes to the expenses, this is pretty straightforward. If you're curious about what your utility expenses are, reach out to those utility companies. Call them on a particular property or a couple of different properties and ask them what the average utilities are. More often than not, when it comes to utilities, they won't give you the individual monthly breakdown. What they will though do is give you a amortization of the monthly costs throughout the year. Same thing when it comes to something, say like insurance. Reach out to an insurance company and ask them what it would cost to insure a particular property or particular properties, and then use those in your calculations. So as an investor, but more importantly as an agent, I ask this of clients all the time, what are your goals? So as an investor, as a real estate investor, what are your goals? What are you trying to achieve? Some real estate investors are fine having a property that just breaks even because they're in it for the long-term appreciation. They've got a strong W-2 job. They just want to buy a property and they know that in the long run, they're going to make out on the appreciation side. Other investors, oftentimes those investors that are just getting started or those investors that want to try to leave the W-2 world, are looking for cash flow. So it's helpful to understand what exactly you're looking for. If you are looking for, as an example, cash flow, are you looking for a certain amount of dollars per property or per door per month? Or are you looking for a certain cash on cash return? Put simply, a cash on cash return is how much money you made over a year time period on the money that you invested into the deal. So let's say, hypothetical example, but easy math, you invested $100 into a deal and you made $10 over that year time period. That means you made a 10% cash on cash return. So again, it's crucial that you define your goals. Without having your goals, you're just trying to hit a moving target. And in the real estate world, if you're trying to hit a moving target, that equates to never buying a property. Because what will happen is you're going to analyze property after property after property, and nothing's ever going to look good because you're not really sure what you're looking for. If you create a defined target, let's say as an example, your goal is to make $500 a month per door on a particular property. Well, then you can analyze properties until you find one that meets that goal. And once you meet that goal, then you can pull the trigger on and buy it because it's meeting the criteria that you're happy with, that you've already previously established is necessary in order for you to make a purchase. Step number 4 is to find an investor-friendly real estate agent. I don't think you just find any real estate agent. Now, I might be biased because I am an agent and licensed in the state of Colorado, but hear me out. You want somebody that can help mentor you. You want somebody that knows how to identify and analyze an investment property. An investor-friendly agent that also invests in real estate themselves knows how to analyze properties and can analyze a property for you. They can also be a second set of eyes on your analysis. And oftentimes, because they're an investor themselves, they're intertwined in the local investing network around your area. They're familiar with deals both on and off market and can oftentimes find and help negotiate opportunities that maybe you wouldn't have looked at or passed up because you lack the experience. That's what they're there for, to help you out in that process. So having an investor-friendly agent allows you to have another resource on your team that you can learn from, that you can bounce ideas off of. It doesn't just have to be about you, it's about building that complete team to help you reach your investment goals. So oftentimes what they'll do, as any agent would, is they'll set you up with automatic emails, which will send properties that meet your criteria straight into your inbox. But again, too, because they're intertwined in your local market or in the market that you're investing in, they oftentimes will be able to uncover opportunities that might be just about to hit the market or may never hit the market at all and bring them to your attention. One mistake that I often see people make is trying to find some secret deal, oftentimes some secret off-market deal. The reality is, from my perspective, it shouldn't matter where the deal comes from as long as it meets your goals. I have people call me up all the time asking me if I have any off-market deals. My response is always the same. What's your criteria? What are your goals? What are you trying to achieve? Because if I can find an opportunity that meets your goals and objectives, it shouldn't matter where it comes from, right? So whoever you're working with, make sure your goals are clear. And if your goals are clear, they're gonna be better able to facilitate finding you properties that meet those goals. Step number 5 is to start analyzing a lot of deals and make offers. Now, I know that step number 3 was deal analysis, but this is where you're actually putting it to use. You're gonna become so familiar with analyzing deals in that market that it's gonna happen super quick for you. In fact, what I would recommend is that you block 10 minutes a day on your calendar and you analyze 2 to 3 properties. And what will happen is over time, you'll become faster at this, right? Because you're more comfortable with it. But you'll eventually find a deal that you think might work. And so once you find a deal that might work, what you should do then is call your agent and make an offer. don't worry, they'll help you with this. And so you're gonna deal with a lot of rejection, but eventually you're gonna find something that will work. Step number 6 is due diligence. This is where you wanna schedule things like inspections. You wanna verify any information that's been given to you by the sellers. You want to dig into rental rates and or any leases that are currently existing on the property. This is where you also want to connect with a property manager. If you're short-term renting it or long-term renting it, you want to connect with that property manager so that they know the details of the closing. If you are going to be short-term renting it, this is an opportunity then to measure rooms, order furniture and supplies. Make sure you have everything lined up so that once you close, you can hit the ground running. Step number 7 is property management. So are you going to manage it yourself or hire it out? Now, from a long-term rental perspective, most property management companies charge around 10%. This can vary slightly by location, as well as it depends on the number of properties that you have with that particular management company. But I've got properties around the country, and on average, I see around 10%. Short-term rental, that really depends on what services you're asking them to do for you. If you're looking for a company to just handle the marketing and guest relations, they typically charge around 10%. However, if you're looking for a short-term rental company that can manage everything, it can actually vary rather drastically, anywhere from 20% to 40%. Those are my key steps towards purchasing your first investment property. If you like this video, go ahead and give it a thumbs up. And if you haven't already, please subscribe. Any suggestions for future content, go ahead and hit me up in the comments below. And remember, if you want something bad enough, you'll find a way to make it happen. If you don't, you'll find an excuse. We'll see you next time.